Hello, everyone. Thank you for joining us today. I am going to ask all of you that are not our main presenters to please turn off your video so we don't draw any unnecessary bandwidth for this meeting. Thank you all for joining us today for our 7th weekly webinar Wednesday. I think this program has been doing a pretty good job and going pretty strong. So we're glad you're all able to join us today for this timely topic on the Coronavirus Food Assistance Program. We got the information yesterday. Thankfully, we already had this on the schedule today, so the stars kind of aligned in our favor on this one. Just a brief overview on the weekly webinar Wednesday before we get started, and I turn it over to our panel. Each of these webinars is roughly an hour, which means we need 3 of the weekly webinar Wednesdays to equal 1 in-person master dairy meeting, just because 3 plus 3 plus 3, or 1 plus 1 plus 1 equals 3, ignore me. I need you to fill out the completion form to receive credit. We've been very lucky that a lot of people have been joining us on these weekly webinar Wednesdays. So the only feasible way for me to count you is for you to go to this link and fill out the completion form. The link is https://tiny.utk.edu/tmdp_ and the word form. And that just simply, you have to select which one you were at, enter your name, and that way I'll get you entered into the roster. These recordings will be posted for later viewing to the UT Dairy website on the Master Dairy page. And you can record those for Master Dairy. You can view those for Master Dairy credit as well. And for any agents who are requesting in-service, you should have signed up in Super. And if you missed it and you want to view it later, go to Kate at the same tiny URL, but with /dairy in-service at the back end. All right, Aaron is our first speaker up today. He is an ag economist with us, and he's done some great presentations for us in the past, and he's going to go over the program itself. Charlie, I believe you're going through a spreadsheet, kind of an example of what to do, and then Sridhar is going to finish up with some questions about PPP and EIDL, and then we're going to open it up for Q&A at the very end.
All right.
Aaron, take it away.
Okay. Let me just bring this up. Okay, Liz, can you see that?
Yes, I can.
Perfect. All right, as Liz mentioned, I'm going to kind of go through the CFAP, direct payments to dairy, crop, and cattle producers, kind of the information that was released yesterday and how some of the payments are calculated. One thing I will say is the payments to commodities, the payment rates themselves are pretty straightforward. What does need to be clarified is some of the language and the commodity definitions, and that's likely going to be provided by USDA between now and the 26th, hopefully. So first, just kind of as a quick overview, there are 2 different sources of funding. It is something where it's not really important in terms of what producers are going to receive in terms of payments, but there is 2 different components to the USDA funding. The first one is the CARES Act of $9.5 billion, and then the other one is the CCC, which is $6.5 billion. One thing that is important to note, even though there's 2 sources of funding, there's only 1 application that producers have to submit and 1 payment amount. Now, that payment amount will be broken down into an 80% original or initial payment, and then a 20% payment at a later date. In general, commodities that had a 5% decline in prices since the beginning of January are eligible, but we'll go through the whole list. Inventory and claims will be farmer certified. So implementing agency is FSA, so you will have to end up setting up an appointment. You can schedule an appointment with your local FSA service center or visit farmers.gov. For those that are new to FSA, there are some additional forms that may be required. I anticipate that most people on this call will already have those forms with FSA, so it's just the completed CFAP application. They'll have to be done in person, through mail, or online. In terms of timeline, the applications will begin May 26th and will conclude August 28th. The initial payment will be issued for 80% of each payment. I'll go through how that is calculated for dairy, crop one, and a livestock one. The final payment will be issued at the discretion of the secretary. In terms of eligible commodities, I've got the complete list up on the screen right now. The ones that are kind of important for our discussion are obviously going to be corn, soybeans, dairy, and cattle. There are specialty crops that are also eligible for these payments that will also affect some producers. And then there's an additional set aside that they haven't defined the agriculture commodity. So if there isn't a specific commodity that's on this list, there still is a chance that there'll be a payment down the road. So producer eligibility, to be eligible for a CFAP payment, you must complete the form and have a share in an eligible commodity between January and May 14th. Payment limitations. This is where things are a little bit different than some previous programs. There is a payment limitation of $250,000 per legal entity, and the limitation applies to the total amount of CFAP payments with respect to all eligible commodities. There is a special payment limitation rule for corporations, limited liability companies, and limited partnerships based upon the number of shareholders. That does not exceed 3 shareholders. So if you do have one of those types of corporations, if you only have 1 shareholder, it's still $250,000. If you have 2 shareholders, it's $500,000. And if you have 3 shareholders, it's $750,000. And if you do reach that max, it will be reduced based on the number of shareholders. One thing that hasn't been clarified on that is it doesn't stipulate a percentage of the shares held by an individual. So, for example, the way that it reads right now, it would indicate that if you had somebody that owned 98% of the shares and 2 other people that owned 1% each, you would still be classified as 3 shareholders, but there might be further guidance on that the USDA will provide. Other provisions from the 2018 Farm Bill do not apply to this program. So when we look at adjusted gross income, this may come into effect for some people. Ineligible for payments of AGI using the average of the adjusted gross incomes for the 2016, 17, and 18 tax years is more than $900,000, unless at least 75% of your income comes from farming, ranching, or forestry-related activities. Other requirements that apply to other UFSA-administered commodity programs also apply to CFAP, including compliance with the highly erodible land and wetland conservation. There is no requirement to have crop insurance or NAP coverage for an eligible CFAP commodity to be eligible for participation in CFAP. So prices, this isn't overly important. This just kind of gets into how they ended up setting some of the payment rates. So the payments provided for commodity and livestock losses were due to price declines that occurred between mid-January and mid-April. And in the case of specialty crops for products that were shipped but spoiled and no payment was received. For producers of non-specialty crops or our major row crops and livestock, an average payment rate per bushel, and I'll go through those, was determined for each eligible commodity based on the decline in the weekly average of the futures price, or weekly average in the cash price if the futures was not available. For most of the commodities, they ended up using the nearby futures contract as the principal determination. And it was just for 2 weeks, so that period between January 13th and 17th and April 6th and 9th. Just general inventory. As I mentioned, this is producer self-certification of production for the commodity, which includes all of those different commodities that are eligible, and it's based on the individual farm's production records. The producer's self-certified inventory as well, which includes inventory of livestock, non-specialty crops, and wool, we'll get into what those inventory amounts are and what time periods we're looking at. One of the ones that is going to be a little bit challenging in order to overcome is making sure that we have those adequate supporting documents. Now, initially, they won't be required to be submitted with the application, but USDA may request them, or if you do end up getting a request for evidence, you may have to provide them. So basically, you can use pretty much anything that is out there to substantiate that level of production or the sales or the inventory on hand. This includes receipts, ledgers of income, income statements, deposit slips, vet records, registered tape invoices for custom harvesting, and records to verify production costs, contemporaneous measurements, truck sale tickets, and diaries that are acceptable to USDA. So on this one, I would just encourage everybody to make sure that they've got those inventory and sales records, make sure they're as accurate as possible, and it's something that is going to be easy to end up passing along should the request be made. For dairy producers, and this is kind of specific for dairy, the payment using funding from the CARES Act will be determined by multiplying a producer's milk production for the first quarter of calendar year 2020 by a specified payment rate calculated as 80% of the decline in prices as determined by USDA. So again, making sure that you have that evidence for the inventory for that first quarter of production is going to be essential for this program. There's a second component. Again, this is kind of getting a little bit more into the details, but it is important just in how it works in terms of a calculation. Producers will still only see one payment, but it will come from these two different sources in terms of the money that's made available. So payments under the CCC will be determined by multiplying the producer's milk production for the first quarter in 2020 by a factor of 1.014 to account for the increased production in the second quarter by the pre-specified payment rate, and we'll go through that. For livestock gets a little bit more complicated. You do have cattle, hogs, lamb, and yearling producers. Payments will be made for CARES funds by multiplying a payment rate per head specified by species and class. So again, this gets a little bit more complicated, and we'll step through the table on why it really matters what some of these weight categories are and how they define eligibility by the type of animal. But the first component is based on the volume of sales occurring between January 15th and April 15th, multiplied by the applicable payment rate. The second component, the CCC funds, are inventory on hand. So right there, you will notice a big difference in the two different, quantities that are being eligible for a payment. The first one is sold livestock. The second one is the inventory number, the highest inventory number on the farm between April 16th and 14th. For eligible crops, crop inventory for the purpose of non-specialty crops, so we're talking about our primary row crops, corn and soybeans, is going to be the principal ones in Tennessee, cotton if you're in West Tennessee, is the lower of the self-certified unpriced inventory that our eligible producer has a vested ownership interest as of January 15th, and it cannot exceed what the producer ended up producing in 2019. So one of the challenges here is the definition of unpriced inventory. So again, if you've forward contracted some production, if you've hedged some production, that won't be eligible for a payment. Where you get into some gray area is if you use something like a basis contract where you only partially protected the price of the commodity stored. So again, that's probably going to have to be clarified by USDA, but since there is still some price exposure, if you've only done a limited pricing or a partial pricing of the commodity, I would suspect that will remain eligible, but we'll have to wait for further clarification on that. When we looked at unpriced inventory, it means anything that has not been on any type of binding contract. So again, just to kind of look at this, and I'm just going to minimize this here. If we look at the CARES Act, these are the different payment rates. And it's important to look kind of commodity by commodity. So if we look at corn and soybeans, there's the different payment between the CARES Act and the CCC payment. For crops, the inventory numbers are the same. And I'll step through an example for corn on what that payment will end up looking at. But again, the important determination on the inventory is anything that was held in storage from the 2019 crop that was held as of January 15th. Now, if you had more than 50% of your 2019 production held in storage, then it is capped by that. So it is the lower of the two, the amount that you have in storage or the amount of 2019 production. When we look at dairy, we have the two different payment rates. And again, they're both based on first quarter production. The difference is the CCC payment is the CCC production is multiplied by a factor to bump it up to indicate the second quarter increase in production. Cattle get a little bit more complicated in terms of the different payment rates. So you can all see the CARES Act payment rate of 92, 214, 102, 139, and 102 based on the animal category. The CCC payment rate is the same across all the categories. So that's another one that's an important distinction. And again, that CARES Act payment is based on cattle sold from January 15th to April 15th, whereas the CCC payment is based on unpriced cattle inventory between April 16th and May 2014. And it's the highest inventory level in that period. So again, just looking at this table, you will notice some very big differences in how livestock is treated and how our row crops and dairy are treated. These two inventory numbers for the CARES and the CCC component are the same, whereas when you go into livestock, it is a very different, it's two distinct inventories that are being priced under those two mechanisms. So just a quick, simple example. What I ended up doing here is I ended up taking 9,200 as an example of the representative production for the first quarter. You multiply that by that 471, that CARES Act rate, and then you add 9,200 times that increase factor times 1.47. So in this example, as a dairy producer, you would end up getting $43,332 plus $13,713, which is a total payment that you would be eligible for of $57,045 or about $620 per hundredweight. You would only get 80% of this payment as an initial payment. The other 20% would come at a later date, subject to funding availability, which I do not anticipate being an issue. I think there will be every effort to make sure that these programs are fully funded. There is some additional stuff that's also in the works, as everybody knows. When we look at crop producers, again, what we're looking at is that self-certified unpriced inventory, and it cannot exceed 50% of 2019 production. So in this example, when we look at corn, it's a little bit different calculation. What I used as an example is 10,000 bushels held in storage. You multiply it by 0.5. This is just the formula for the crops, multiplied by that 32 cents per bushel payment rate. And then you have the additional the same $10,000 multiplied by 50% times the CCC rate. So essentially what you're getting on that 10,000 bushels is 33.5 cents. And it's just how the payments are broken down. It's not really important from a producer standpoint. It's just in how they end up, or how the USDA ends up pulling money out of these two different pots. What the producer will end up seeing is this bottom dollar amount, this $33.50, and as I mentioned, about $33.50 per bushel when you look at it on a per bushel basis. And again, you'll receive 80% of that total initially, with the other 20% coming at a later date. When we look at livestock, again, I took a very specific example, feeder cattle, greater than 600 pounds. If you sold 10 head between January 15th and April 15th, you multiply that by that CARES Act payment rate, and what you end up getting is $1,390 if you sold 10 animals. If you still had 10 in inventory, you would multiply that 10 head in inventory, $33 per head, an additional $330 for a total payment of $1,720. Now, one thing that's really important to point out in this example is these two per head are obviously, they're the same in this example, but they don't have to be. It's dependent on what you ended up selling between January 15th and April 15th for the first component, so the 139 per head, and plus what you have in remaining inventory in that weight category. It is really important to make sure that you organize any animals that you may have eligible for this program into those individual weight categories. So just before I turn it over to Charlie, he's going to show kind of a spreadsheet tool that allows you to estimate what your payments are and make sure that you can stay underneath those payment limits for the individual operation. So the first thing is get your documentation together for production, sales, and inventory records by category. There is going to have to be some additional categories that need to be clarified. Pay really specific attention to cattle weights, because if they fall in certain categories, it might be something where you can end up getting a little bit higher dollar amount if you have animals that are above a certain weight. Now, it is, again, subject to making sure that you have that inventory verification. And I think on the livestock side, that is going to be one of the more challenging aspects of this, because there are certain animal categories that still need to end up being clarified by USDA. And one of the examples that I will give is just the plain and simple fact that if you think of inventory less than 600 pounds, is that going to include calves at foot? And the way that it reads right now, it would indicate that yes, it probably would, but we would have to end up seeing additional clarification. From a dairy standpoint, again, there's some verbiage in there that would lead us to believe that we're probably not going to get payments for culled animals or for steer calves, but that is not certain. You can make an argument based on the current language that there could be the potential, at least, to end up getting some payments on that. There's no guarantees right now. I think that has to be clarified by USDA. So what I'll conclude with is I will just say this: just make sure that you get all of your inventory records for crops, livestock, and milk production put together in an organized fashion, and then await clarification on some of the animal categories that may or may not be eligible for payments, because that will be coming out between now and probably the 26th when they have sign up, or shortly thereafter. So the more prepared you can be to submit these declarations, because they are going to be declared by individual producers, the better shape most of us will end up being in. So that's kind of an overview. What I'm going to do now is I'm going to turn it over to Charlie and let him kind of step through a spreadsheet that he's developing that we will make available on our webpage to make sure that people can kind of look at potential payments by animal category and making sure that we stay under those payment limits. So I will turn it over to you, Charlie.
Thanks, Aaron. I'm going to get my screen to share real quick and see if this thing works for me. Can everybody see that okay? If I hear a no, then I'll know. If not, we're good.
We're good, Charlie.
Awesome. So as Aaron said, of course, with this program being rolled out yesterday, it kind of put us in a hurry to try to get a tool together for y'all and for other producers in our state to figure out, what kind of payment can I get. So with that, we started developing this spreadsheet, and what we have here is, first off, we have a cover here, a simple cover, but what you see right now is not going to be the completed product, but it's going to be somewhat similar to this. So the first thing you'll do is, Aaron kind of mentioned about enterprise and how many owners are in the enterprise. And so you will have up to 3, because anything 3 or more will set your limits. So like, say for instance, I own the business myself. The total value I can get and the max that I can get is $250,000. If I work my way to 2, $500,000. If I get to 3, we're talking $750,000. So you'll have that value here, and it'll be calculated, so you don't have to worry about inputting that part. All you'll have to do is tell us how many owners from this page right here, and then these will be blank at the beginning, and we'll show you how I get these numbers in a minute. But anytime you're over your total value allowed, it'll be red. But anytime it's at or under, it'll be green. So you'll know immediately if you're under or below or above or below what your legal limit to get. So in the bottom here, we have all the titles or the groups, how they grouped them. So we have non-specialty, wool, livestock, dairy, and specialty. Don't worry about sheet 9 because you won't see that. But I think we need to show you kind of how it works so that way you know where to input. So these yellow boxes is where you'll input your information from your enterprise. And so kind of going off of Aaron's example of 10,000 bushels of corn, we put it in here. And if we just zero this out, you'll see you get 0. But if we put back the 10,000, whoops, let me get out of this. If we put back the 10,000 back in here, you'll get to that payment that he was talking about at $33.50. And so we have it already. We'll have it set up for each commodity already to go. So you'll just input your information here. And something to be cognizant of and be aware of is that when you do mess with these commodities, remember that it's capped at 50% of your production from 2019. So for instance, I was playing around with an example here. If I still had 60% of my commodity for upland cotton, I'd only could count for 50%, which is 300,000 of 360. So just for showing y'all how it works, it's kind of that. This is just an example. As wool, if anybody had wool, you just put in yellow, input your information there. As you get to livestock, I have included cattle, hogs, and pigs, lambs, and yearlings. As Aaron mentioned, there is some discussion as to what, from the dairy sector particularly, what can be classified as livestock. According to a USDA call late yesterday, cull cows will not be a part of the program, or they cannot be enrolled in the program, but there's still some talk as to if there's a way we can clarify that explicitly. Again, if you have calves at side, specifically steers at side, when that question was not asked in the call yesterday, just ran out of time. But according to some of the livestock economists around the country, it seems like it won't be allowed. But I would not, my opinion would be go ahead and let them tell you no. I would go ahead and count those steers and put it back on them to say, no, we can't count this, or yes, we can count that. I think that would be the best advice at this point because of the lack of clarification from USDA on that side. As we get to dairy, this will be yellow right here, and you'll just have to input your count in hundredweight for how much your production was, and inside we'll have the calculation built up already with the adjustment for the production of the second quarter, as well as the payment from each rate. So for this instance, I put 9,200 pounds of milk. And so if we go back to the total value here on the bottom, it calculates, okay, hey, here's what we have coming from the specialty side, the wool side, the livestock, dairy, and the non-specialty side. And it calculates that. It'll calculate all that value together. So like for instance here, it'll calculate this value and bring it over here so you don't have to worry about it. And it'll say, okay, your value is $88,895. But with the initial payment, if we remember, we only get 80%. That's what you're going to be getting on your initial payment. The remaining 20% is going to be $17,000 if we were running with our examples that I plugged in. And in the definition right now says at a later date. What does that entirely mean? It's not really clear at this point. But they made it clear on the call yesterday that they feel like they have enough money between the CCC program and the CARES Act money and to cover all 100% of what they expect that they're going to get. I don't know where they come up with what their expectations are, but they feel like they have enough money. So at least for the 80%, I think time is of priority. If you know your inventory, if you have not already contacted your FSA office to try to get a jump on everything, I would go ahead and do that between now and next week whenever they start taking applications, and go ahead and be the first ones out there trying to get this money because I feel like it's going to be similar to the PPP program and the EIDL, and it's going to be first come, first serve. So we need to get y'all ready to go to get that money. And I hope that this tool is going to be helpful for y'all. It should be ready to go by the end of the week so that y'all can play with it and get stuff going for over the weekend and try to sit down and be able to go through it. And if there's any questions, don't hesitate to email me or Aaron or Schrader, who's going to talk here in a minute. But with this, I hope it's useful. And with that, I'm going to go ahead and quit sharing my screen and get ready to hand it over to Schrader, and we'll get to going here.
So you're going to send that out to us, Charlie, when you get it finished?
Yes, sir. As soon as it's polished off, I will send it in an email, but it will also be on our website for the other producers. But yes, once this is done, it'll be sent out.
Thank you.
Yes, sir.
And Charlie, if you're okay with it, I'll plan to send it out to Tennessee Dairy Discuss as well and put a
Yes.
direct link to it on our Market Outlook page as well. So y'all be able to find it in a couple of places.
Awesome. I know I've seen a video where the USDA has talked about how they're going to submit if you do it virtually or remotely, and it's going to be somewhat similar to this tool. And so that way you already have your numbers, and you just look over and you can just move your numbers back over to their sheet. So that's what I'm kind of basing it off of, also to try to make it as easy as possible because it's already going to be confusing enough, I feel like. Well, with that, Streeter.
Thank you, Charlie. Can you all see my screen with the Paycheck Protection Program information?
We can, Sridhar.
All right, great. So I'm going to give a little brief overview of the Paycheck Protection Program and also the economic injury disaster loan. So back in towards the end of March, the Coronavirus Relief and Economic Security Act was passed, and it was signed into law. And there was $349 billion that was allocated to support small businesses. So the funds were allocated on a first-come, first-served basis, and they were exhausted in less than 2 weeks. So in order to help more small businesses, on April 24th, there was an additional $310 billion that was added to the Paycheck Protection Program, and also some money to the economic injury disaster loans. So let me go to the next slide. All right, so in the round two, in round two of the Paycheck Protection Program, there were $310 billion that were added to small business owners, and which included about $60 billion towards the economic injury disaster loans, out of which $50 billion was to support loans, and $10 million were allocated towards grants. And then an additional $250 billion were added to the Paycheck Protection Program. And there were a lot of questions as to, agribusinesses, if they were eligible or not. And there was confirmation that agricultural enterprises were eligible for this. So for the economic injury disaster loan, there's a formula where you can actually get money for up to $1,000 per employee. And the max to get is $10,000. I'm going to walk you through those differences between the Paycheck Protection Program and the economic injury disaster loan in just a second. And then applications were accepted since April 27th. So here's a chart that, oops, excuse me. One second. There you go. Here's a chart that compares both the PPP and the economic injury disaster loan. I'm going to walk you through what are the bigger uses, first on the Paycheck Protection Program and then on EIDL. So the main use of the PPP was to help small businesses support their payroll and any operating expenses, including utilities, electric, gas, transportation, internet, and things like that. And you don't have to have any collateral required for the Paycheck Protection Program. And you can actually get forgiveness up to 100% of the loan amount, provided you meet certain requirements. And I'll walk you through requirements as well. And then the maximum amount you could get is $10 million, which is, or it's about two and a half times your average monthly payroll. In terms of interest rates, the interest rate that is charged is about 1% for the unforgiven portion of the loan, and then you for a maximum of 2 years. And then you don't have to make any payments after the 6 months. And people who are eligible to apply for these are all for-profits, sole proprietors, and independent contractors. Some of the questions we had gotten before was, is somebody who gets a W-2, who doesn't get a W-2 to their employees, are they eligible to apply? They are, and they have to apply for a PPP loan by themselves. And then how to apply, you need to talk to an SBA 7A lender or go to the SBA website and you can see all the details. So in terms of the economic injury disaster loan, the main use is towards working capital. So there's no collateral on loans up to 25,000, but then there beyond 25,000, you need a collateral. And then there's 100% forgiveness option up to 10,000, which is taken as an advance. And the maximum amount you can get is 15,000 or up to 2 months of the monthly expenses, whichever is higher. And then the terms of the loans are, the interest rate is about 3.75% for small businesses and 2.75% for nonprofits. And you can actually pay it off over a 30-year time frame. You need not make any payments until 12 months. And in terms of eligible entities, any small business with 500 people or 500 employees or less. Sole proprietors are eligible, small agriculture co-ops, aquaculture, private nonprofits are also eligible. And then to apply, you can go to the COVID-19 relief on the SBA website. So let me go over some of the minor details in the Paycheck Protection Program. Like I said, it's mainly for people, small business with less than 500 employees. So proprietors are also eligible, and also there was a special provision made for accommodation food services. That's the NAICS, North American Industrial Classification System of 72. If you're in doubt, you can look it up. And also, one of the requirements was the businesses should have been operational between February 15th to June 30th. So that is called the covered period. So the maximum amount, like I said, is up to 10 million or up to 2.5 times your payroll. So for existing businesses, so basically what you do is you take your average monthly payroll and you deduct the compensation made to pay employees who make more than 100,000, and then multiply that by 2.5 times. And then if you have any unrealized share of any 7A loan or SBA loan that's approved, you can add up to that. And then for businesses that are not in business during the covered period, let's say you're a seasonal business, and then for you, mainly this average monthly payroll between January and then end of February, plus any unrealized share of the approved loan. Like I said, the maximum loan term is 2 years with a 1% interest rate, and there are no payment penalties, and you can defer your payments up to 6 months. So allowable uses include the payroll costs, employee benefits, commissions, operating costs, rent, mortgage interest, utilities, and then interest on debt. Again, sole proprietors, independent contractors are eligible and also with somebody who's not making more than 100,000. So excluded costs include if you make more than 100,000, you can't use these loans, or you cannot use to pay for payroll taxes, railroad taxes, income taxes, any compensation for an employee who's outside the United States, and also you can't pay for sick leave or qualified family wages. So going forward, the small business loans are the Paycheck Protection Program. The loan is eligible for loan forgiveness. So the expense or the allowed costs include your payroll costs, mortgage, rent, utility payments, which includes your electric, gas, water, telephone, internet, and even transportation. Also included are tips and any employee wages. So in case any of the small businesses lay off workers, you will have to deduct the salaries paid to those employees during that time. And you cannot deduct more than 25% of the wages paid. But there's a provision. If you bring them back on the payroll before June 30th, you can still deduct those expenses. So switching gears to the economic injury disaster loan. Eligibility is for any agricultural businesses or other small businesses with less than 500 people. Sole proprietors or independent contractors are eligible as well. Allowable uses include your payroll, fixed debt, accounts payable, any expense that can be paid due to the disaster. So the maximum amount that you can get is about $15,000, and you can actually get a cash advance of $10,000, and that's applied at the same time as when you apply for the loan. Your interest rates are 3.75% for businesses and 2.75% for nonprofits. You're not required to make any payments for 12 months, and you can extend this up to 30 years. There's no payment penalties or early payment penalties either. With that, these are our references, And I will open up for questions.
Thanks, Sridhar. I'm going to go ahead and steal the screen back from you now.
Sure. Let me stop sharing. There you go.
All right, so we asked you all before the meeting if any of you had any questions you'd like for us to pose, and I have done so. So the very first question that we have is, can dairy producers who ceased production during this period still receive CFAP payments? And Charlie, I'm going to throw this question to you.
So as it reads now on the dairy side of things, if you cease production, it's only the payment that you can only get is based on your dairy, the dairy milk, the actual milk production. So that's as it reads right now. If you cease production, the only payment that you can get in a dairy enterprise is based on your actual production of milk, not on the actual cow side. But that could be up for discussion. As I mentioned, if there's any clarification, if coal cows or if cattle that were once dairy got transitioned over or had no production, that was some of the talks about yesterday's USDA call. So as of now, that's the way it reads. Aaron, do you have
Yeah, just to kind of clarify on that, if you ended up having 2 months worth of production in the first quarter of 2020, and then you weren't in business in the third month, you would get payments as it reads right now on the first 2 months worth of production. And I suspect that will probably hold even after the USDA provides some clarification just in how the calculation works. It's a production-based calculation. So again, it's going to be determined based on what you produced during those 3 months, multiplied by those payment rates. That's how I interpret it as well.
Yes.
All right. Our next question that was put in the chat is it $250,000 per commodity or per farm? And y'all excuse my bad typing as I was quickly writing these up as they were coming in.
The way it's developed is it's per legal entity, right? So that would apply to all commodities on the farm. Originally, when this program was first announced, there was a commodity limit that was being discussed. That is not currently in the rule. So again, it is per legal entity. So again, it depends on how your farm ownership is set up. We did go through in that one slide the potential payment limits. If you are a corporate entity, can go up to $750 based on the number of shareholders. $250,000 is per legal entity for all commodities that are produced under that legal entity.
Excuse my dogs in the background. I don't know if you can hear them or not. The mail just got here, so they got really excited. All right, these are questions that were sent in yesterday and this morning. Can small dairies without W-2 employees apply for the Paycheck Protection Program? Sridhar, you want to field that one?
Yes, absolutely. So for small dairies without W-2 employees, if you do a 1099, you're still eligible, but your employer or the small business can't apply on your behalf. You have to apply by yourself, and there's specific guidance out there. You need to look at your Schedule C and a whole bunch of other documents. So I would say contact your SBA lender, and you should be able to apply. And this was a common question we've got repeatedly, and the answer is yes.
Thanks, Sridhar. This next question is, if a dairy ships 511,000 pounds per month, so 511 hundredweight per month, what would the estimated CFAP payment be?
Okay, well, I kind of quickly ran this. So if you have 511 pounds per month, what you'd end up getting is multiply that by 3 to get your quarterly production. The total payment you'd be eligible would be $9,505, but you'd get 80% of that as your initial payment. So that'd be $7,604 in initial payment, with the remainder going at the 20% when that is issued down the road, where the date is not specified. And that includes both the CCC and the CARES component. So that's an aggregate number that would be the amount the producer would see show up in his bank account or through a check, however the funds are dispersed.
I was going to plug it into the thing, but good math, Aaron.
This is why I gave them to you a day early. All right, guys, we have a question in the chat, so get ready for an off-the-cuff one. How long is it typically taking to be approved for EIDL? They applied May 4th, and they still haven't heard back. Sridhar?
I was looking at the website and it's taking a while, and apparently there's a wait period. So I don't know exactly the number of days, but as long as you're applied, there's still funding available. So I don't know that directly. Charlie, do you know do you have any updates?
The part of the issue is that the program that so whenever you put your application in, the portal that they use for the collection of applications, when it first came out, it broke. They redid it, and so now I think they're just slowly working them in. And if as long as you got your application in, and if there's money, it'll get approved. It's like it's variable depending upon how fast they're able to get through certain things because of their portal. Good old-fashioned technology.
Right. Last I checked, they have about $60 million in the EIDL. The May 7th date, they had allocated only like $10 billion. So there's still money out there. So you should be able to get it. But yes, there is delays as far as we know.
All right, so the next question that we have, I don't have any more in the chat right now, is there a limit to the number of CARES Act programs that I can apply to? Like, can I apply for EIDL and PPP and CFAP, or do I have to pick one and go with my best option?
As of right now, if you are in PPP and EIDL, it does not preclude you from applying for CFAP funding. So what you do with CFAP funding is separate from those two. I'll let Sridhar answer the question about PPP and EIDL.
The purpose, like I said, when I shared, the purpose of the PPP is for payroll and operating expenses, and for EIDL, it's towards working capital. You can't double dip in both the programs for the same purpose. So as long as there are different purposes and you can apply for payroll related expenses towards PPP, and then if it's towards working capital, you're eligible to apply for EIDL.
Thanks, guys. We have another question about EIDL. Is EIDL doing a blanket UCC on assets for collateral? They don't want to put up all of their assets in order to get maybe $100,000.
Sridhar?
I don't think there's any collateral required for until 25,000. So beyond that, you are to take. So, Charlie, do you want to add to that, or?
No, that's from what I get is that you don't have to put up collateral at that amount, and that was one of the benefits of the EIDL. You might take on a little higher interest rate, but that can be a long-term loan, and the liability for that is not as great.
Okay.
You also have until 30 years deferred time as to, if you want to repay that back. So there's a longer time frame.
All right. So just so I'm clear, EIDL does not require an applicant to put up collateral similar to PPP.
For loans until 25,000. So for something beyond that, they'll take real estate as collateral.
Okay. And is that we take all of your real estate as collateral, or is that equivalent to what you are applying for?
I am not clear on that. I think that can be clarified with the conversation with SBA.
Okay. So person who sent that in, if you want to respond and let me know if that answered your question or not, we'll keep moving on. Next question is, can I apply for multiple farm enterprises under CFAP? So to get up to my 250,000 limit, if that is my limit, can I combine corn, soybeans, beef, dairy, whatever else I can think of? And would that include things like hemp and tobacco?
It has to be an eligible commodity to be in there, but yes, you can include multiple farm enterprises. What is really important is what the legal structure is. So, you have to make sure that you adhere to that limit. So I'm going to say 250 with the caveat that if you're a corporate entity, you can maybe get a little bit higher than that. But your payments for your corn in storage, your livestock that was sold between January and April, the livestock in all of those would aggregate. So that's one of the benefits of having that spreadsheet that Charlie demonstrated, because what it'll do is it'll take those farm entities. Again, one thing that is important to point out for that spreadsheet is make sure if you have multiple legal entities that you're affiliated with, that spreadsheet's not set up for that.
Nope.
It's just for that individual legal entity. So again, it will aggregate it and you have to stay underneath that 250. But yes, you can get multiple farm enterprises. Currently, there is no payment mechanism for hemp or tobacco. There is that $647 million that's still set aside for commodities to be determined later. I'm not saying that either one of those will be included in that, but there is some money that is still out there for commodities that haven't been discussed.
Okay. Thanks, Aaron. Our next question is, how will farmers have to prove total production in hundredweight? I know y'all touched on this a little bit, but if you wouldn't mind revisiting this just so we make sure everybody hears it.
Yeah, I mean, the easiest thing and we were speaking about this before the conference call, what you want is something that is just really easy to end up proving what you ended up producing for that quarter. So Liz, you mentioned, you know, your bulk tank, and I forget what the one that Bilderback ended up mentioning.
Daily pickup reports.
Daily pickup reports. So something like that would be great to verify your production. Something that is common across industries. Where you'll probably see more variability is outside the dairy realm, particularly livestock. Trying to end up providing documentation for that, we might have to get a little bit more creative. At the end of the day, though, it's important to remember that these production and inventory numbers are self-certified. And so again, you want to end up being as accurate as possible and just maintain the amount of documentation. Once you do end up applying, and I think I might have glossed over this in the presentation, it is your responsibility that after your CFAP application has been approved to maintain the supporting documents for a minimum of 3 years. So think about that when you are applying for this, making sure that you set aside those documents for verification in case you are audited.
Okay. We've got a couple more questions. There's one from the chat that I'm going to read off first. So if a beef, cattle, cow, calf producer has cattle on hand but sold none this year, he is still eligible to claim his cows and baby calves under CFAP.
Yes.
Yes, there is some debate. I mean, the way that it reads right now, when you look at those weight categories under 600 pounds, you can make an argument that would include the calf at foot. And so again, we'll see if that's clarified any further, but you do not have to have sales. There's the two distinct inventory components. There's that was sold between January and April, and that was on the farm from April until May, the highest level. That's what you will end up getting paid for. You just wouldn't be eligible for the first component, that is the result of sold livestock, if you just have inventory during that period.
That'll be the $33 per head, if I'm correct.
And that is one thing that's important to point out. When you look at that table, when you look at the CFAP, there's the CARES component and the CCC component. The CCC component is the one that's paid on inventory that's still held during that time period. It is the same across all animal categories. So that does alleviate some of the calculation complexity there. When you're not looking at sales records, you're looking at inventory records.
Yep.
I'm going to tag off a little bit because a lot of our dairy guys will have a separate beef herd that they run, whether that is for dairy steers or beef dairy crosses from undesirable animals. So those dairy steers that are going to be part of what is essentially a beef herd, or beef on dairy crosses that are never intended to enter into the dairy production pipeline, could we claim those as beef animals or a beef herd on our operation?
So in the call yesterday, the one that was called out was explicitly was the beef cow or the dairy cows for cull side. No one touched on, or no one asked the question about taking these steers, knowing that they're not going to dairy production at all. And talking with some livestock economists around the country that were also on that call and talking about the interpretation of the rule, we all kind of said, well, we know that these cows are going to the beef side of production. I would go ahead and count them as inventory for on the beef cow side, on the livestock side, and see it and let them say that they cannot be counted. Put that on them. And, we get the inventory account and let them be the ones to tell because at this point clarification isn't very clear. But the money's going to be started getting handed out, and applications are going to be out next week. It would be really unfortunate for someone that has a lot of steer calves that side, and it turns out that we could have counted them and there's money left on the table for the producer. So I would say go ahead and go for it and wait until if someone says no, then you won't get your money. But until then, try to go for it.
Yeah, just to kind of expand on that, what I would suggest is make sure that you get your inventory record and do it by animal category and weight, and just spend some time to make sure that you are trying to accurately depict what inventory you have in different categories and different weights. And then there will likely be some additional clarification on some of these issues, specifically the steer calf from dairy, in addition to some other clarifications. But making sure that you have those records so that you can input it into that CFAP application form, I think is really important. Just make sure that you have everything ready to go. And if we do receive clarification and they say, no, it's not a go, I guess you've wasted a little bit of time recording those, but at the same time, I'd rather have that and ready to go and make sure you try to maximize that payment based on what we know. Just try to organize that as much as possible. Another one that there's some clarity that kind of required that kind of feeds up the same line as the issue of double counting, right? So you can make an argument that if there was an animal sold in that January to April time period, somebody would claim that as a sold animal under the CARES Act, but it would also potentially be in somebody's inventory as of the April 15th to May 15th. And so that's could be construed as double dipping. But again, we don't have clarification on that because it's different entities. So again, it just highlights the importance of making sure that you have those sales inventory records so that you can justify the animal categories and weights as accurately to FSA as possible, and then having the supporting documentation if they request it.
Thanks, Aaron. The last question that we have is about silage. And the question is my silage going to be valued differently than corn as a crop? Can I claim silage? And how should I report my silage inventories if I can claim silage?
Unfortunately, silage is not specified in the current funding. So it would not be eligible to receive payments as it reads right now. Again, I mentioned that there is a set aside for additional commodities. I would not want to speculate whether silage would be considered, but as of right now, there is no indication that silage would be eligible for a CFAP payment. It is based only on grain in storage. There's no indication that silage has any payment rate, but there could be one thing that I will say, and this is for all commodities that aren't specified with a current payment rate, there will be a notice of funding availability if they do add additional commodities. And so it will be important if you do have inventories that are not currently eligible or currently defined as a CFAP payment, to make sure that you continually check and see if there are new payment rates that are issued for commodities that aren't on current lists.
So just for my own clarification, when we're reporting things like corn for a dairy, we're not reporting plants in the field or tonnage harvested. We're specifically reporting grain stores of corn. Same thing for soybeans, not acres planted or tonnage harvested being stored on the property.
You are reporting what you have an owner stake in. So in the bin is going to be the most common. I mean, there are some other forms of ownership that could be out there in commercial storage, but I don't think that's going to be applicable in East Tennessee. So what you have in the bin as of January 15th. And so again, it's a point in time. You are only looking at what you had as an estimate for January 15th, and that's what you'll get paid on. So that'll be the 2019 crop that is in storage for pretty much everybody for corn and soybeans. One that was left out in the list that is maybe applicable to some is soft red and soft white wheat were not included. It was just durum and hard. So again, wheat is not eligible for payment for those that are producing wheat in Tennessee at this time.
Thanks, guys. So that's the end of the front-loaded questions that we had. We've had a couple people write in questions to the chat. If you want to write into the chat with a question, feel free to do so. If you have a question you would like to ask verbally, just unmute yourself and I'll call on you when you see that you've unmuted.
We did a good job then.
All right, well, while y'all are still thinking about whether or not you have questions, thank you so much for being here today. As a reminder, you can go to the UT Dairy website to get this and any other information. We have a full section on COVID-19 resources where all of the information that we've discussed with the ag economist will be posted. You can also find it all on their website as well. And please, please, please don't forget to fill out that form that is listed here and has also been sent in the chat to get Master Dairy credit for this webinar or in-service credit for this webinar. It's just the easiest way for me to make sure and best way really to make sure that I have everybody listed who was here today, because we do have people come in and out. So thank you so much to the team from UTA Ag Econ. We really, really appreciate you getting this information to us in such a timely manner and all the resources you've helped us pull together. Are there any more questions before we close this down? I realize we're a little bit over time. All right, I'm not seeing any, so I'm gonna go ahead and end the meeting now. Thank you, everyone. This serves as an update to the May 20, 2020 weekly webinar Wednesday covering the Coronavirus Food Assistance Program. Some new information will be clarified by the USDA specific to payments for dairy producers in the next few days. Some potential additions may be made regarding corn silage being eligible as an unpriced corn inventory as of January 15, 2020. A conversion factor would be provided to convert tons to bushels. Additionally, some categories of dairy cattle, culls and steers, may be eligible for payments under cattle categories. We are awaiting further clarification on the animal categories and if both or one payment rate, CARES or CCC, will apply to dairy cattle sales or inventories. Once written clarification is obtained from the USDA, we will provide an update. For now, we encourage everyone to collect and organize inventory and sales records so timely applications can be filed once written clarification is provided by USDA and the application period opens, which will be May 26th. For any dairy producers who had to dump milk during COVID-19, be sure to include the records you kept recording any dump milk for CFAP payments.